Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm basically trying to get you what you need to know before you go, and that starts out with some economic data, talk about the geopolitical environment, what happens with the impact of that on the markets, and then ultimately we'll find some option strategies we can talk about to implement in and around these type of assumptions we come up with. So without further ado, let's get on with the economic data. Across the pond is really what we're going to be looking at this week, because here in the United States, it's not really a whole lot to see here other than all these Fed governors are going to be talking this week. You know, it's right after the FOMC meeting. There's a parade where they can't really talk before the meeting. Well, as soon as that meeting's over with, it's everybody has their opportunity. So I think we're going to see a lot of folks talking, starting with today with Powell speaking. And then later on this week, we have Williams, Jordan, Cunliffe, or actually Cunliffe's not, he's Great Britain, and a couple other ones. Basically, just once a day, we're going to hear a couple of governors speaking, I think. And then later on this week, we'll also get some inflationary data out of the PPI numbers, mostly out of Europe is where we're going to be getting these. Remember the flash estimates on PPI, PMI, those are going to be what we're looking for as to strengthen the economy moving forward. So keep your eyes out this week. There's going to be a lot of economic data, mostly across the pond. But here in the United States, we're going to be looking to the Fed governors to give us a little bit of insight as to what's going on there. So without further ado, let's get on with the markets, because just really not a whole lot of economic data as it is a Monday. So crude oil, risk is the upside here, folks. Why? Because there's just no extra supply coming into the market. If we look at Russia, they're being taken offline. That means a couple of million barrels a day not making it to the market. Here in the United States, we haven't gotten our fracking operations back up to speed, where we're producing close to 11, a little bit better than 11 million barrels a day. We're below 10 right now. So that is crimping some of that supply as well. That will help drive that price higher, as there's still demand out there through the manufacturing sector and folks getting out there and driving. You know, we have seen the unemployment picture look pretty good. That means folks are out there driving, and that means they're consuming crude oil. One thing to note about that, high prices with crude oil tends to cause recessionary pressures. Why? Because we're spending so much money on gas and not other places in the society. It slows the overall economy. It's just a fact, folks. So higher prices for crude oil, while some folks say that that's a good sign for the economy, it has a tendency to really put the nail in the coffin of the economy trying to get some legs under it. Bonds. All right, bonds. Risk is to the downside, folks. I talked about this even in that pop up into the 160s. That was ridiculous. That was the time to really start selling into that, sell the rips, buy the dips kind of thing. Well, I would not be buying dips in bonds here at this point. Anytime you get a rip in bonds, that would be the time to look to sell some covered calls against your portfolio there. Talked about that in the webinar, so please check that out before you go, and make sure you smash that like button too. Gold futures, excuse me, gold futures here, still trending along this trend channel. Now, we've talked about this, that acted as a resistance before. It was one of our outer bands for this resistance area. So it's really nice to see that it's showing up as support here. So I'd keep an eye on this when we're starting to look at trend channels. We haven't really gotten another channel for the upper side. This bottom band, though, is acting quite nice. That I would keep an eye on that. That's looking like an area of support. Keep in mind, it is lining up quite nicely with the previous all-time high in gold futures. So we're toggling back and forth from that. So folks that haven't had an opportunity to sell there might take advantage of that. That could cause some negative pressure there. But all risk, I believe, for Bitcoin and gold are to the upside there. All right, we're seeing VIX, try to decide what's going to go on here. Well, Friday, something to talk about here. With Friday's strength into that close, going into a weekend, usually with a lot of turmoil going on, we see some weakness in the equities as people just don't want to hold on over the weekend to keep that uncertainty in their portfolio. So we see a lot of negative pressure on Fridays around turmoil in the overall global economies there, and that's what we've been seeing. But we saw a lot of strength there, and as a matter of fact, we might say that NASDAQ came up slightly shy of that 50-day simple moving average, but across the board, the equities elsewhere did finish above those 50-day simple moving averages, and much to my surprise, well above where the points of controls were for some of these. Now, point of control here for the NASDAQ is slightly higher here, so still some pressure to the upside. I think we could see NASDAQ continue to climb here with what we're seeing here in the Dow Jones Industrial Average. Got above that 50-day simple moving average, but something to note, it's lined up perfectly with this point of control. That means that's where most people have transacted. That is going to allow this market to settle down around this area. If you think about it, when you've transacted a price, or even with a stock, when it comes back down to that price, you just really have no angst. When it's way above your price, you want to sell it, and when it's way below your price, you want to get out of it as well. So when it's right there at the price, you just have a tendency to kind of sit on your hands, and that's what we have, what we see happen in the markets when it's around that point of control. Folks have traded that price; they just aren't as there's no motivation to trade that price once you've already seen it several times. E-mini S&Ps again above the 50-day simple moving average, but one could point out that it is right between resistance here at, we'll call it 4,500 here, and then support at 4,300. Well, right between that, the volume node is almost slap right in the middle there. So again, it's at the point of control. A little bit overextended. It's not on that mark, but a little bit overextended really isn't going to cause that much angst in the market. So I think that we're still within that area of reason that the markets really aren't going to go anywhere, maybe bounce around a couple of 100 points, but for the most part, we're at those points of control. 50-day simple moving average, most people will point at that, hey, we're moving into a bullish trend here. I still say the risk is to the downside. While that said, I wouldn't be as aggressive on selling rips as I was in the past. Volatility's come off a little bit. That opportunity to sell calls may have subsided for at least the near term. We're going to have to wait for better opportunities and something like that. But selling puts, still an opportunity to add to our portfolio by lowering overall cost basis and things that we already have. Gives you dividend on underlyings that you don't already have in your portfolio synthetically. So check out Pro Trader Strategies in the webinars where I drill down on every one of these different option components, when, where, and why we would implement them. So based on some certain guidelines that you guys can easily pick up and spot opportunities with. So please check those out at Pro Trader Strategies. Subscribe, make sure you hit that little bell because I'm unannounced most of the time, especially on these spot the trades, and you need to have the bell lit up in order to be able to participate because you get that notification, all right? Hey, and I don't see any comments as of right now, but I will circle back around here and make sure that you folks are clear concept. So if you have any questions, comments, throw it over there for me. And don't forget to smash that like button before you go. Feeds those bots, all right? Throw those bots a cookie. All right, that was terrible. If you can't take that, take it easy.